Hello and welcome to the live weekly market overview presented to you by Forex Academy. My name is Robert, and during the webinar, we will be discussing a brief overview of the financial markets over the past week and apply some technical analysis to multi-time frame analysis. Now, just before we continue, as always, there is, of course, risk inherent in trading the financial markets. So please do take a moment to familiarize yourself with the following disclaimer. In each of our webinars, we like to go through a little piece of housekeeping just before we begin. As always, this webinar is live, so feel free to ask questions throughout the webinar. You have a chat box there located on the bottom right hand of your screen. So at any time throughout the webinar, type in the question there. I'll be able to see it and hopefully respond to you in a good time period. This live webinar is being recorded and will be placed into your members area once the webinar has concluded. And if you could just give us probably 1 hour there just to upload it into the members login area after the webinar, it will be revisable as a recording. And obviously, as we finish off each and every one of our webinars, we have a quick 15-minute Q&A session at the end. So if you do prefer to keep some of your questions to the end, that is absolutely fine indeed. What do we aim to do in this webinar? Well, first and foremost, we aim to assess the key news events and themes of the week. Each and every Friday, we'll meet here. We'll discuss market theme, market momentum, and really the news factors that have really shocked asset prices throughout the course of the week and allowed us to involve ourselves in that opportunity with the volatility, particularly in the Forex markets there. In particular, obviously, we see the volatility in the Forex markets, given the liquidity, given the way they move to each and every economic news piece of data. They are moving all the time, so they provide us with a constant opportunity and very good technical setups across many of the different Forex majors, minors, and exotic pairs. So we'll have in a particular keen eye in assessing the Forex markets themselves throughout the webinar. We'll be taking advantage of multi-time frame analysis. Now, what in particular does that mean? Well, it means that we look at the markets and look at the charting, not on one particular time frame, perhaps daily candlesticks, but we look at the longer term, bigger picture setup. So we'll have a keen eye on looking at the weekly candlesticks for the markets. We'll also break those markets down into small time periods to look to see how the markets have moved in relation to the news this week, and to see what trading opportunities were very good in terms of trade selection for the week there, and obviously looking forward to the week ahead. And of course, then we'll be reviewing the charts over the last 5 days, and particularly, as I said, to the Forex markets to see how the news has affected the markets, to see what the price action is doing, to see over the long term if those markets are at price inflection points, and obviously to derive trade selection in terms of opportunity and moving forward. So what themes dominated the market this week? Well, we had a bit more Brexit uncertainty with Theresa May's government, and obviously continually through the last 2 months in particularly deliberating with European Union members to an accord over the Brexit situation. Do we decide to include the UK in the single market, the European single market mechanism, or not? The trade question is the big question in terms of actually finding an accord. And obviously, as the headline hints, this week, no Brexit deal until next year, perhaps UK officials say privately. So that has actually added a little more uncertainty to possible short-term ratification of any contract or deal to be met. Obviously, we do have now March 2019 as the deadline for the Brexit negotiations, but we obviously are trying to decipher the fine detail in those negotiations at the moment, and they are proving difficult. So that has unsettled markets, and as we look across, particularly the euro currency and some euro assets as well, we'll be able to see that that weakness has flooded into the markets given the news. We have seen a bit of a gamble approach, a bit more, I suppose, guidance from Mario Draghi. The headline reads, Draghi's guidance change comes at an awkward time. Really, we've seen the European Central Bank President Mario Draghi drop a pledge, I suppose, to increase quantitative easing if needed. Now, we have seen obviously that deliberated as confidence in the durability of euro area growth. But what it means here really is it does come at an awkward time, considering we have possible trade war rhetoric with Donald Trump. Do we really want to be dropping any or taking the foot off the gas when it comes to quantitative easing at a very uncertain time? That is the question this headline poses, and certainly that's how the markets have reacted, just as he made his press conference there on Wednesday. This shift, nevertheless, what I would say acknowledges that you know emergency stimulus. We have more faith in the economy. Perhaps emergency stimulus isn't needed to such a grave extent, and in the not so distant future, we will be seeing, I suppose, a backward pacing stimulus coming off the European economic area. The Bank of England hints at earlier and larger rate increases, and that's certainly the case. We've seen Mark Carney be very hawkish um, towards a further heightening of pace for his interest rate increases for 2018. The market has certainly read that, and trying to read between the lines of his press conference this week. I suppose it's very much in contradiction or in comparison to his forward guidance towards interest rate increases. Now we're seeing a much more heightened pickup pace towards those increases. So let's see how the market prices that in. We see obviously the pound has been quite volatile in that retaliation this week. And we see the European Union says it's counting on exclusion from Trump metal tariffs. This is a story that really rocked the markets there last week when President Trump came out and decided to impose trade tariffs, and particularly in the metals. I believe zinc and aluminium are the main metals which will be imposed, very heavily imposed tariffs there for importation into the US from large producing countries. And I suppose the real worry, and particularly the equity markets showed that worry with downside price momentum, that it would spark a bit of a trade war, perhaps for China and the European Union. Here we have the European Union coming out and really outlining that they do not want to see a trade war occur, and we are expecting or counting on our good friend President Trump to exclude some European partners there in any possible future tariffs on any other commodities or assets indeed. Now, looking towards the Forex markets, we obviously view our Forex activity matrix each and every week. We particularly look at the price action for the week and analyze the price delta, which is the percentage change across the Forex pairs, particularly all the majors, and see if that leads us to any good trade selection. What sticks out as we immediately look at our matrix for this week, what sticks out like a sore thumb, we can see Japanese yen is extensively weak there across the board. We are seeing the Swiss franc also showing some downward trading, and obviously we see the euro pulling back from very strong trading last week, and obviously that leads into our previous price stories. We've seen the market react quite extensively to the downside, and a bit more of a pullback there across the euro area in terms of global equities and euro-denominated assets, as a result of the news of the week. Indeed, we're seeing the dollar have some very varied price action, and that is technically very significant given it's really been the story of 2017. If you think towards how weak the dollar has been for 2017, and that story feeding into 2018, we have, you could say, almost hit a bottom technically, with a double bottom in the dollar index and a double top perhaps in the relative euro US dollar. Technically, it's a good setup. Does that lead the market to believe that we've hit a bit of price consolidation, and does that price congestion suggest to us that bulls are coming back into the market? We're seeing that the dollar is not so negative or significantly negative this week, and it's sort of flatlining there with no real price action or swing to the downside. We can see obviously Euro Mexican and US dollar Mexican retreat quite strongly. That would be indicative, obviously, possible trade selection in the Mexican currency itself, and perhaps some strength coming in there indeed. But as I say, what sticks out like a sore thumb for us is certainly Japanese weakness. We can see obviously we have some recovery across the US and European equity markets, and really that's back onto risk on approach to the market. If we know the Japanese yen and understand it as a safe haven currency, generally what happens when we see uncertainty creep into the market, we see capital flood into the Japanese yen as that safe haven currency. We're seeing that trade start to unwind now, with capital flows retreating from the currency itself, and that's leading obviously to some weakness to the downside in the currency now. And we're seeing some Canadian strength, which is albeit lacks strength. We are seeing it across the yen and the Swissy, but those currencies are showing some weakness as well. But in terms of the fundamentals, it is building us a picture. We're seeing the oil market is stabilizing now from a previous sell-off as well, in and around $62 per barrel. We're seeing policy remain unchanged in terms of the Canadian rate decisions, left unchanged Wednesday. So those market uncertainties have fizzled out, and we're leading to a little bit of a bump in price to the upside in the Canadian dollar. So that's very promising indeed. And as we look across the Australian dollar and the New Zealand dollar, what we can see is, well, it's all green. It's green across the board. It's not the most convincing bullish price movement. We have the Japanese yen quite strong there with a 2-star rating. We have obviously the Australian Swissy as a 2-star rating. We have the New Zealand, again, some 2-star ratings there for bullish price movement. But as we can see, green across the board, which would suggest to us that technically, even as we look at weekly delta or weekly percentage price gain, that those potentially could allow us for some very good bullish trade setups in the week ahead. I believe fundamentally we're seeing some discussion that perhaps Australia and New Zealand are largely unaffected by the Trump trade tariffs, and that's obviously leading to a little more speculation to the upside in those currency pairs. And the question obviously is, can we look for some strength to filter in across those markets or those currency pairs for the week ahead? Perhaps obviously, as we can see, very strong weakness in Swiss franc and Japanese yen. We could look to buy Australian yen and Australian Swissy, or potentially across the New Zealand currency pairs as well. So a lot of very good price action there in our Forex activity matrix. Let's have a look as we go through the charts before technically we ask ourselves the question, how important is multi-time frame analysis? Well, in observing the markets in many different time frames, we can achieve better sentiment analysis to market direction over the long term. Now, what does that mean for us? What is developing better sentiment analysis to market direction over the long term? Why would that benefit our trading? Well, obviously, we need to ask ourselves the question, as traders, do we want to be buyers or sellers? Do we have a directional bias? And as we look at this bigger picture over perhaps weekly or monthly time periods, we can certainly ascertain how price is moving in the long term. And if we're looking for continued price to the long term, that can certainly reflect and have a good, stronger conviction trading approach to actually deciding what trades to take in the short term. So this will help us to deliver a consensus on the bigger picture for each of the individual markets. Particularly for Forex markets, where we attempt to trade strength versus weakness, and that's what we do as Forex traders, the long-term price view will aid us in our directional bias and trading in the short term. Absolutely. Certainly, as technical analysis suggests, technical levels of support and resistance hold more weight and are better established over long periods. And that is most certainly the case as a technical trader. You want to look for the reaffirmed inflection points in the markets, the reaffirmed structured levels of support and resistance over the long periods, because the market has viewed them as real levels where price cannot break through, whether it's a floor or a ceiling. We can actually look to hold those levels and to trade them in the short term as well. If we look at, perhaps as an example, price charting over 5 minutes compared to price charting over a daily candlesticks, and we see the same level in the markets, well, for us, obviously, the honest answer is, as a technical analysis, the longer term price resistance level has much more weight and is much more variable in terms of making trades as a price structure. So let's observe the charts and be quite analytical in our approach to actually trading and looking for possible trade setups throughout the Forex markets. So first and foremost, we have the euro dollar now. We're looking at the weekly price charting just straight off the bat here. Over the long term, we can see, as we just get our epic pen here, we can see that we've had the sell-off 2014, but looking closer towards most relative price action, we have seen a very strong trend to the upside continue to develop over 2017 and on to 2018. Now, where we're at the moment is this price inflection point here. We are seeing quite a bit of price consolidation over the last few weeks. So what I'd like to do is actually zoom in to this price congestion and give it a little bit of a technical view on price action. Really, in terms of trading, here is our long-term price over the long-term, I suppose, annual perspective. We have seen price channels to the upside here, and we're right at this inflection level, whether we should continue the price channel to the upside. We're creating a little bit of support and resistance to the downside here as well. Not sure straight off the bat whether at this price it provides us with a technical trading opportunity, just given that we've seen price congestion for several points. We have seen with this candlestick here a hammer that would suggest that in the previous week's price action, we got the market trading to the downside, and then it retraced back to the upside, which actually would lead us to ascertain that it's a rejection to the downside. But we haven't seen significant push to the upside for actual price speculation to continue on as the trend would suggest. So just to zoom in a little more on the price action here for the weekly candlesticks, considering the euro dollar, it is quite a varied picture. Now, what I'd like to point out again as we zoom in on closer time periods as well is this is quite significant. We see this double top forming and series of higher lows. So by observing the different multi-time frame analysis, we can actually ascertain more information to actually price decision or indecision. And what I mean by that is the market has trended up. We've seen a high here. It's rejected the high again. We have this M-shaped double top. It's rejected it again here. Now we have our higher, sorry, our lower high around these points here, and that would suggest us that we have a rejection to the upside of our 125 level, and price may continue to the downside. Now that's looking, of course, in the shorter daily time periods as well. Over the long-term price trend, we can still see trend to the upside. It's just a simple level of price consolidation. So as you can see, you do need to observe these different price periods as well. This doesn't particularly show us that we have any double top in this price action, that perhaps if we get trading on a close of this candle, or perhaps next week's candle, a close above that little price structure, that would indicate actually we're looking for price to move to the upside over the longer term. But certainly as we zoom in on the price action, again, we can see that to the downside, given the way price action has traded. And let's not forget, it is bearish price action. It's not the most convincing price action that we look at the candlestick for the week, but it's certainly still very bearish to the downside in the short term here. And as we look at simply yesterday's price action here, we can tell that that is a very strong bearish candle indeed, getting a slight retrace, but we could very well see this zigzag congestion price action in the euro dollar continue over the sort of short to medium term indeed. What we'll do now is just have a look then, going through with the euro pound. We can see now there's a lot of uncertainty, yet that volatility hasn't led into any strong price move to one particular direction for quite some time here. So this, in my view, is a very difficult market to trade, certainly in the short term, or if you're looking for a breakout trade at all. Obviously, we can see that there has been quite some time, perhaps, as we look at the weekly candlesticks. If I could just perhaps put a price point in here and move this on for. There we have 2017, the 9th of the 10th. So for quite some time here, we have in and around September time, 2017, price has been moving sideways in the euro pound. So we have a lot of stability there. Now, whether you're a short-term trader and decide to trade between the range, that perhaps would give you some price opportunity. We can see a very, very significant over the long term price level support at our 87.80 level indeed. And we haven't seen a close below that level for a long, long time. So that's technically a very, very sound level of support and resistance over the long term, and certainly would deliver to us if we see price action trade and close down below this level with a close below that. That would provide us with a very strong indication for finally some price movement in the euro pound to the downside. But as I say, we haven't seen it for a long time. Technically, as we look at our candlestick structure, by judging the weekly candlesticks here, we can see that every time the prices has traded down past our level of support and resistance, it has rejected these levels, and certainly we get quite a strong bounce from it last week. So that would suggest that we're on the fence with this market technically. That is a technical analysis. This is where your patience comes into light. Another point I'd like to make is we have seen quite a strong descending triangle to the downside, and just with last week's candlestick, it's been very strong in terms of a close above that level here. That would suggest that the price congestion has squeezed for quite a long period to the downside and has been actually rejected. Particularly, we're looking for these bursts to the downside, which we do not get. So perhaps speculation could be to the upside in the not so distant future. In terms of looking at the chart technically over the weekly candlesticks, doesn't really lead us to any consistent or any formidable trading strategy per se. As we'll break it down into the daily candlesticks, we can really see that this market's going nowhere very quickly. And you can see over such a long period of time, we have a lot of indecision. We really have a lot of indecision. Looking to sell this market here with a stop loss here above would perhaps give you a 2 to 3 to 1 risk reward on the trade. But in terms of a long-term price movement with our technical analysis and fundamentally with the uncertainty with the discussed Brexit decisions, we can see that it doesn't give us any significant idea as to price speculation at the moment. With the weekly price action as well, it has, you can see with the news event with the European deliberations with Theresa May's Conservative government, that it's not so conclusive. We've seen the euro currency pull back again from what looked to be quite promising trading activity to the upside. So again, nothing very significant across many of these euro pairs as we move across to euro yen. Again, we can see the overall trend in the long term. Where we are observing this as we zoom in, a very bullish trend again. This is indicative as well of a long-term price movement. So we have a very strong trade to the upside here. We have seen, and lo and behold, this was in tandem with February, this very strong pullback to the Japanese yen. That would have been indicative to what we described there previously as the safe haven yen currency. As the equity markets sold off, we see strength in the yen as capital flow goes into it. And obviously, as this is the euro yen, we're seeing the second leg, the euro, actually trade as the equity markets start to sell off quite violently. We're seeing strength in the euro, strength in the Japanese yen pull this market to the downside, allowing us for good trading opportunities as well, breaking a bit of a level of support here. If I just remove that line, this level of support here. So possible trading opportunities if we're looking to understand fundamentally that the markets have come back in terms of the equity markets, that uncertainty is coming out and we're seeing them retrace the correctional levels. We see a price in the euro come back up to show a bit of strength, particularly in this week. That could be a possible trade for us who are consistently bullish the euro over the long run. And obviously, as we see the price structure, it is in a very strong trend. So if we do get a close above, potentially above our, let me just zoom in with this price action here and annotate this in a little more detail. I'll zoom into our daily levels. It is certainly much more significant when we judge the price action and how it's trading now. We have our long-term level of support here, and we have seen a very strong sell-off in this market, and it has come back up and rejected right off our level. So that would annotate to us short-term uncertainty. However, if we decide to become buyers in this market, given how the fundamentals are stacking, technically we'd be looking at a daily close above this level to constitute price to the upside, and back up to closing above our level of support and resistance. So this is certainly one to watch. We've seen obviously the Japanese yen weak across the board now. So we're looking for opportunities. May that reverse, or do we follow the trade decision to the downside, to see how the market reacts in the week ahead. Certainly, it's at a bit of what I would call an inflection point, and looking for possible trading decisions around these technical areas of support and resistance is really what we do, is as we find these levels, these genuine levels of support and resistance as technical traders. Obviously, we have seen a bit of a pullback across many euro currency assets, and particularly in the dollar. We've seen it with the head and shoulders and double top. And what we've seen with this week is, I suppose, a bit of following on discussion from what I mentioned last week in terms of the uncertainty, or the worry or uncertainty I had of potentially buying the breakout to the upside in this market, and that served me well, that patience, because as you can see, by observing this in the long term weekly price action here, we have some very significant highs here as well. So when we do get long-term price shifts to these levels, you always worry about buying the market through really long-term price points, price highs, and that's exactly what we see. So this candle for us is very significant this week. What I'd like to actually do is zoom in on the price action to better detail it to you guys. If we zoom in closer, we can see that candlestick has literally shows us, I believe it's an inverted hammer candlestick. It shows us and represents a rejection to the upside, particularly after an engulfing candle to the upside as well. That price does not want to trade up, and that we get this pattern, this price pattern that has really reflected historical movements to the downside. It is very significant given the fact that we're in a very strong trend to the upside, and a very strong trend channel has led to this price movement to the upside. That rejection would tell us that the buyers just aren't interested anymore in buying this market above this level, and that we could very well see a retrace. So certainly sell trades would be the technical trade at this moment, and look for price to continue to the downside. Fundamentally, obviously, we've seen some strength in the Canadian dollar. I did mention some strength come into the oil market. We've seen some uncertainty come out in terms of policy decisions by the Bank of Canada this week, coming with no real rate of change to the overall interest rate change policy rate, on its Reserve Bank currency. We've obviously seen this hasn't happened in one day. We've seen, as we zoom into the daily candlesticks, price move convincingly to the upside, and then as we see 1, 2, three candlesticks really to tell us the story that price does not want to move to the upside. So very, very significant indeed in terms of looking at the long-term structure to see that we have now, the market is telling us that momentum is moving and shifting to the downside in the Canadian dollar, particularly against the euro, as we see, so, I suppose, varied strength across euro assets as well. Now move across then just to look at the pound US dollar. Over the long term, we are in a very strong uptrend indeed. What's quite significant that we notice as well, now that we're always discussing, it seems like every week now, this Brexit situation and what it means for the currency, um, is that it's actually retraced um, almost full levels back to 142 of the actual move of the Brexit decision. We have seen a very strong trend to the upside, and in the closer term, we've seen a bit more with the weekly candles reject off those levels. So that would mean to us that there's a little uncertainty in terms of the forecast, the medium to long term forecast in this market, and it's indicative, of fundamentally what is happening in the market. As we can just actually zoom into closer time periods, we'll look at the daily time periods now as well. We can see that it has rejected straight off the retracement level from the Brexit decision, and we get this very unfamiliar upside movement in in the pound cable market, pound dollar. It's almost it just doesn't want to breach new highs as well, or even come back up and test it, but it isn't showing any significant moves to the downside. We can see technically we have these lower lows at these little price points, these areas of resistance, and now we almost have this new floor at this level. So it could actually potentially provide us with buying opportunities, and we are, of course, what we would call in our ascending triangle in the long term. And I can actually just point this out to you in a more short-term approach. Potentially, I would say from here we have a very strong uptrend indeed, and it's just retraced really off our long-term ascending triangle to give us potentially buying opportunities at two price points, two inflection levels. One, our ascending level here, and two, our level of support and resistance newly formed, which has become a new floor in the market as well. So I would say technically we could look at this for a little price congestion to see if the market decides to break through to the downside, and actually stimulate a little bit of selling momentum here, or if it settles, could we have a very small risk reward trade to the upside to look for simple retrace back up to our 142 level. Certainly two very good opportunities we present, and we'll obviously be looking and keeping a keen eye technically on this as we approach the the week ahead. What I'd actually like to do with this market is just to zoom in a little closer to perhaps the 4 hourly chart. We can see that we are having some zigzag motion trading, but the volatility is actually decreasing in the market, and that's indicative of the fact that is there going to be an agreement, an accord coming up to the end of March or not? And now we're obviously getting some news to tell us that there's not. We're seeing much more volatility, decrease, and then now obviously a decrease yet again in our 4 hour candlesticks. Not much trading has actually been done below our level of support and resistance, so that would indicate the price still wants to stay above these levels over the sort of short to medium term. So I would say we can look for a possible buys in and around this area, still for a good 3 to 4 risk reward up to here. But do be aware that as we breach these levels, we can see more price momentum push towards the downside. So that's just observing the 4 hour chart in the cable market. We can move across now to our more familiar as well, US dollar yen. Obviously, I've suggested we have seen a lot of yen weakness this week, and what we're actually seeing here is a combination of both. We're seeing some dollar strength and yen weakness. So obviously, as forex traders, we can zoom in on a little closer on our weekly candlestick. What does it mean for us? Well, it means that we're finally trying to look for some of these lows in the dollar markets. We can see that we are still in a very convincing downtrend. So do be aware, buyers, until we actually perhaps break this channel that we're in, that we might not have a directional bias to the upside. But we have seen not one, two, three times we've seen, just where I color in this area here, a little bit of a low creating in the market, which would suggest that we're going to see a little bit of consolidation in and around the 106 level in this currency pair. Now, what I'd like to do is actually just zoom out and try and get an overall picture of this market and how it's trading. You can see that evidently, technically, it does lead us to say that we are seeing these areas here where they're actually lower lows, which will always indicate to us that price is moving moving to the downside. Again, we've seen these areas as well, which actually indicate, again, that's not the most convincing, but that indicate to us that price is moving to the downside as well. It's much of a structured approach, and it is trading very technically at the moment with a very strong overall breakout of our level of support and resistance in and around our technical area of this area here, 108.80. So it did, obviously, as you can see, just by observing the weekly candlesticks, this candle is most certainly very significant in its body, in its shape. It has seen a slight retrace from the lows, but it's also a Marubozu engulfing candle to an extent, apart from a very small retracement. And we've seen price move down to the downside as a result. Continuation merely is what is happening in this market. So certainly not a buyer's market at the moment. The dollar still remains weak across many currency pairs, but perhaps with this price action across with the yen, we're seeing the dollar certainly bounce for the short term, and obviously it may provide us with a little bit of retracement back up to what can often happen, back up to our retracement level at our level of long-term level of support and resistance before following momentum again to the downside. So do be aware, in the short term, these can also provide us for short-term trading opportunities. Not necessarily always looking for the master trade, the long-term and price speculation trade. Moving on to the US dollar CAD, it's very significant, certainly as we look at the daily candlestick. And I'd like to point out as well, the weekly candlestick is that inverted hammer that we certainly do not like to see if we are buyers in this market. It is at a very strong level of support and resistance, very strong indeed, and it is closed below the level. Now that would be a very strong signal to us that price is certainly favoring downside momentum. We have seen some Canadian dollar strength fundamentally as we looked at a forex activity matrix for the week. We're seeing some Canadian strength. We're seeing some US dollar weakness as well. So everything adds up here technically and fundamentally for a potential trade setup to the downside. And again, we can see this very familiar price structure. It's almost what we call the formation of our second shoulder, this being one, this being our head, and this being our second shoulder to the downside. So technically it's very well setting up both on the weekly, both by judging the weekly candlestick setup, and as we zoom in on closer price action by observing the daily candlestick setup, it really consolidated within this little box area that I'm just about to highlight here. We have two levels of support and resistance at this time. We were very unsure, very uncertain where price movement was likely to go to. Within this box, we've seen consolidation, we've seen the break to the downside, we've seen that retrace the whole way up to perhaps allow us a perfect sell entry in and around the lows here. We're looking for price to come through, at least break our level here and follow potentially down to 124, 123 again. Certainly over the long term, as we observe both the daily price action, both the weekly price action, and we can even zoom in to look at perhaps the 4-hour charting as well. We can see that price does not want to trade, and technically there's very few closes. There's retracements from that level. It doesn't really want to trade above our 130 or 129 level here at all, 129.90. So most certainly price speculation and the way the price charting is suggesting that trading should be focused on price movement to the downside, technically and fundamentally. So that's certainly a very, very good trading opportunity presenting itself in the marketplace at the moment in the US dollar, Canadian dollar. Now, what we have across the Australian dollar was some very strong currency reaction for the week there just past. We've obviously seen a bit of a bounce, and we have a very convincing consolidating bit of price action with this zigzag movement. It's not convincing in terms of long-term price structure, but as traders, we're not always looking for a long-term trade for perhaps 1 month, 2 months, and profit is profit, of course. What we have seen is these lower lows be constructed time and time again in the Australian US dollar. We yet have another one with this week's price action, so I would argue that this is very strong indeed, indication that we can look to trade this to the upside. We have varied, I would say, across the asset classes. We have some weakness in the US dollar, we have some strength in the US dollar, but it's not necessarily at the moment fundamentally a strong currency. We know that, and we can see fundamentally the Australian dollar is really picking up, and technically there across our forex activity matrix, it's picking up with some strength across the pairs. So this is certainly a trade. Even just by looking at the weekly time period, we can grab a bit of the bigger picture trade for this market and say that as we stack the odds in our favor as technical analysis, looking simply at the price action here, we can see that it's rejecting lows, creating a series of higher lows, and potentially looking to move to the upside. Let's just break that down to the daily candlestick. Yeah, it's even more convincing as we do so. So what I'd like to just point out again is our little floor that we've created that we can't necessarily see with the weekly chart patterns. We can see that we have broken this little price structure, but then we've got the indecision candle at 2, and then the rejection candle at 3, and then the engulfing move up with candlestick 4. So that's very significant indeed. And then we get a little more bit of a price structure, which is actually a little bit more of a high level, and then the engulfing candle as well, which outdoes the previous 2 candlesticks to the upside. So something very significant going on here in the Australian US dollar, and that's certainly one to watch over the, I would say, short to medium term, most certainly, even for a trade back up to the 80 mark level. So as we look across the Australian dollar pairs, we can certainly look for opportunity in something that's not showing any strength on the second leg, and that is certainly the answer technically. The US dollar, certainly some very good trading opportunities there presenting as we close the market for the week here. Moving across the US dollar currency pair, we've seen the yen show some real volatility this week. It's a very similar trade to the US dollar, and again, with a very strong bullish candle this week, we see it retrace almost the sell-off that had performed to the downside last week. We're seeing the market trade almost to new highs, just rebounding from it, but it's at our technical level of support and resistance that we get the rejection from. So that would suggest that price again has rejected these lows. It's very similar to the Australian US dollar trade, and we're looking for potential trade to the upside. So some very good trade opportunities developing here across the Aussie dollar pairs, and most certainly the technical setups are what I would say really conforming to the fundamentals in the markets as well. If we discuss how the market is reading the Trump tariffs and potentially not feeding into any weakness to the US dollar, to the Australian dollar, then we will, of course, as fundamental traders would suggest, look for potential moves to the upside. So technically, this is both in observing the 4-hour charting, the daily charting patterns, and the weekly analysis here, we can see the price wants to move to the upside. It has rejected of a long-term level of support and resistance, and is finding some real strength across the currency spectrum in terms of majors and minors there. So certainly some very convincing trading opportunities and representations for Aussie dollar strength indeed. Moving across to the New Zealand dollar, we are seeing again just some strength this week, but in terms of its relation to the US dollar, it's actually showing a little bit of a different picture technically. Where we see this price structure, we have an opposite level of support and resistance with what I would call a very, very convincing head and shoulders pattern forming here as well. Here we have the shoulder one, then we have our head at a higher level, and then almost at the same level, we have our shoulders too. The question for this, in terms of judging weekly price action, what I'd actually like to do is just zoom in on this price action and to better annotate it, is actually see that we have a bit of a structure forming just over too many candlesticks. What I mean by too many candlesticks here, there's not one, two, three, four, five, 6, 7 candlesticks. So that's 7 weeks of price action in and around this level, quite substantial. So because price has decided to congest in and around this price point, I would suggest if we have a directional bias given our head and shoulders pattern here, that once we get a close below this little price structure level here, perhaps a candlestick next week, something like this, if you will excuse my drawing skills there, we would look for a very, very constitutional trading to the downside in the New Zealand dollar. That could perhaps be a trade to look for when we do start to see sentiment really shift towards positive feedback or positive price movement for the US dollar currency itself. Then we look to actually sell the New Zealand dollar against the US dollar strength. So technically something is forming there that we can look out for the week ahead. But for at the moment now, nothing too significant in terms of showing us a trading opportunity yet. And obviously, we know that the New Zealand dollar is showing us some strength from the last week there. So, not necessarily looking to become a buyer of that market just yet. Moving onwards then to the United States dollar and the Swiss franc, we can see that it has been very strong. That really, as we can assess now that we go through the charts, we can tell that the story there is not necessarily a story of US dollar strength. That's indicative of how the Swiss franc is moving across the majors and minors, and that needs to be understood, guys. That's what we're doing here as Forex traders. We're looking to understand and develop our skill set towards trading strength versus weakness. And once we get a finer picture of how we deliberate and how we traverse these markets in terms of analyzing them both technically and fundamentally, then we'll become much better traders, of course. Here we have our level of support and resistance sort of in a very long term. If you zoom out on the price chart, we can see that there's been several points that now this is over the long term weekly candlesticks that the market has not actually traded down and stayed down there for quite some time. I would say the last time here we have this little price block would be 2015, guys. So that's quite substantial. We have 19th of May, sorry, that's April, 19th of April 2015. I just have my price point here, call it price I. And then we have this little price structure here. It's the second block, we can call it block K. What we actually have here is the close above that level. So forgetting the fundamentals at the moment, and that's the joy of being a technical analyst, that we can do that at times and just trade what we see in front of us. We can see that the market closes this week with a bullish candlestick, weekly bullish candlestick above our long-term, a very, very long-term level of support and resistance. So that's technically very supportive for us. Now, what I'd like to do is actually go through that and annotate it in a little more detail, zooming in on the price action. Here we can have a little bit of analysis actually on the Japanese candlestick structure themselves. Clear as day, what you can see just by looking at it, it looks like the curve momentum pushed to the upside. As you can see, we get a very big strong movement to the downside, we get less volatility, we get indecision to the upside, we get a little more volatility with exhaustion in the same candlestick. We then get bullish 1 and indecision bullish 2, and then engulfing almost bullish candlestick 3 closing above our level. So in terms of observing the weekly price action, it's quite significant in terms of the candlestick structure. Let's just have a closer look and observe the daily candlesticks and really see what that story that tells us. Yeah, it tells us quite similar story to what we had perceived and most certainly seen in the weekly candlesticks. We can see a continued momentum to the downside with the low, and then again we get a bit of a retracement up to obviously where we were previously. And obviously you can see, just looking at the daily candlesticks over, perhaps this is maybe 2-3 weeks of price action, we get these lower lows back up to our full retracement level, almost closing above it, and then finally we get the close above it with the daily price action. Slight pullback there with today's price action, but certainly closing for the week above our long-term genuine level of support and resistance. So technically, if we ignore the fundamentals just for a moment, that's technically very significant for us. Should we believe that we can speculate price for long-term movement to the upside? Now, what you're looking to do as well, if you're a short-term trader, is to look for price points, whether we get a price structure to come back to these levels. Do we get a burst down through these levels, or do we get a quick burst back up and a close above? That would stimulate some very short-term trading approaches in and around our level of support and resistance. So do be careful if you're trading right around our 94.34 level there in the US dollar Swiss franc. Moving on then, we can look at the Canadian Swiss franc. Over the long term, I like to just look at this chart here because, well, it's very solid in terms of price action. We can see that it really has been trading in between 69.70 and under 77 level mark, or slightly above that for quite some time, really, and we're just getting a lot of price indecision trading up and down. Now this is over a very long, a large price range. So let's just zoom in on the weekly charting and as well. It does tell an indicative story of how the Swiss franc and the Canadian dollar was trading this week, with a very strong move to the upside. Now, let's just assess that move itself in terms of the price action. We can see that we get a very convincing close. It's an engulfing close. It totally outdoes the previous candlesticks volume, and we get it closing just above our level as well, which will constitute a reversal signal for this market in the long term. Obviously, be careful because we are in a very, very long term downward trend, perhaps over a 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 week period. A very strong break to the downside from our higher resistance level up and around this area here. However, if we believe that these are higher lows, long-term lows, then we could maybe constitute to have some directional bias to the upside. But in just observing this candlestick now, it's just really telling us what's happening uh, from the week's price action there. But in terms of a price momentum, it doesn't really give us an overall bigger picture trade, as we suggested, simply by looking at the weekly candlestick. So perhaps what we'll do is zoom in on the daily candlestick structure. Let's see if we can decipher any sort of a little more conclusiveness there, just in terms of rejecting the low. And the reason for that is because the candlestick structure of the week tells us a little more than just one single candlestick. Here we have rejection to the low in the one candlestick, with that full retracement and an indecision, but that indecision closes back towards the high where it opens. So really, if you're a seller, you really try to exhaust this price. What I'll do is actually zoom in on this to annotate it in a little detail. What we tried to do as sellers here in this candlestick here, let's call it candlestick one, is drive the price down to new lows. But we couldn't even breach the previous low, and we got forced the whole way back up within the same candlestick. We closed just flat for the day, and then we got the real sign that we were getting the price movement to the upside. So it does tell a much more structured approach in observing the daily candlesticks than simply looking at the candlestick for the week. But just considering, be careful, guys, because we are in a very, very convincing long-term trend to the downside in the Canadian Swiss franc. So do be aware that we need to break I would say these highs as well to constitute a potential buying decision to the upside. Technically, it's starting to formulate something that we can look at. So do keep your ear to the ground and observe the Canadian Swiss franc for the week ahead. Just to finish off again, I wanted to look at the S&P 500 just to fill you in on a lot of these Japanese yen stories. What we can see is obviously our very long term price trend to the upside, indicative of economic growth in the United States. And then if I can just zoom in, we've seen a real market correction. A lot of fear happened, a lot of fear occurred between market participants, and obviously caused a huge market correction of roughly around 7% of the S&P index. We've got this huge trading. This here wouldn't necessarily be described at this moment as a price structure, just given the volatility, the amount of volatility really in that trading. And we've seen it actually trade to the upside and start to create some sort of price structures that would detail to us and that we're going to get price stability in the equities. Now, what that means really as an equity investor or trader is that uncertainty is coming out of the market, and we can really still believe in the bullish story of the US economy and global growth. And if that is the case, then we will see equity flows react accordingly in something like gold and obviously the Japanese yen, and that would lead us to believe that really in terms of technically analyzing something like this, the Japanese yen, that the Japanese yen is weak. Obviously, if we go back to our just go back here to the charting 1 second to our forex activity matrix, we can see the yen is weak there indeed, across the currency pairs as well. So as we look across the US equities, we can see that sell-off now has stopped, and market participants believe in the bullish market growth and are continuing to trade the markets to the upside. Capital flows then will be retracing and unwinding from Japanese yen, given a market recovery. So that's something that we believe obviously technically stands up, and just keep an eye on the equity market as well. If you're doing any yen trading, if you get any shocks to the equity, and just be aware of your positions may be adversely affected indeed, or vice versa. Obviously, if you get some strength to the upside, you'll be looking to trade the yen accordingly as well. So that's always the case when looking at a risk on, risk off approach when trading these markets. Now that is us finished with the charts. What I'll do is just take 10 to 15 minutes, guys. If you'd like to ask some questions, I'll give you some time there in your chat box. Type in your questions, and I'll certainly be very happy to answer them for you. Now that brings us to the end of the live weekly market overview. Thank you so very much for joining us on the weekly market overview this week. I'm Robert, and from all of us here at Forex Academy, have a great day, and we'll see you next time. Bye for now.